Confirmation today from Stats SA, our economy growing by just 0.5% from the beginning of July to the end of September. Obviously, the contribution from mining was up. Electricity services were down. Interestingly, gross capital fixed formation was up, meaning more money is being spent on infrastructure. Goolam Ballim is the chief economist at Standard Bank. Goolam, good evening. Good to talk again. On the surface, 0.5% is quite a disappointing figure. But I imagine you and no one else really expected anything better.
Stephen, great to talk to you. The 0.5% was in fact consistent with consensus. So the forecasting community had predicted this outcome. So to that extent, it speaks to this idea that we cheer at the minimum 4 consecutive quarters of growth. And remember, the 0.5% is quarter on quarter. It isn't year on year growth. What it therefore alludes to is that the plausibility that for the whole of 2025, the economy could still muster roughly 1.1, maybe 1.2% annual growth. Now that's double the 0.5%. And I guess the last point of modest cheer is that the economy is neither contracting nor stagnating, but seems to be enjoying gentle ascendancy.
We seem to be seeing a bit more money being spent on infrastructure. So about a month ago, the Labour Force survey indicated that many more people are being employed in construction. We see from this figure, construction seems to have turned a corner. I mean, are those very weak signs of a kind of change?
Modest, buds, to the extent that in both 2024 and this year, at an annual level, what you call gross fixed capital formation, which is just an elaborate term for fixed investment, will have contracted in roughly 5% over the 2 years. However, this omen does signal that we could see growth in 2026 in the order of around 3.5%. So you're correct in suggesting that if we look at other guidestones, such as corporate credit growth and imports, and also investment by the public sector, it does augur somewhat favorably for 2026 relative to the last, let's say, 18 months to 2 years.
In so many ways, our economy has changed, and in so many ways it hasn't. I mean, it's because of strong platinum and gold prices, and then again because of our farmers, our economy is growing very slightly. And I mean, you could have said the same thing quite a long time ago.
So, yeah, every time we get to discuss the economy rightly, we talk about various industries, sectors, and then from the demand side, we talk about consumption, fixed investment, and government spending. Overarching all of this ultimately is confidence, and confidence does take cue from the politics. In some respects, the politics has been incrementally favorable, firstly. Secondly, we hear some good news in recent months, for example, the S&P upgrade. We've been relieved of the Financial Action Task Force list with regard to financial management, and we had a reasonably good medium-term budget. Now, we're obviously getting news surrounding the manner in which our criminal justice system seems to be encaptured, and the rule of law is being impugned. So that will somewhat temper confidence. But dare I say, incrementally, the direction of travel is favorable, and we hope the reform agenda out of Operation Vulindlela, as well as any incursions with regard to dealing with crime and organized crime particularly, will be constructive through 2026, so we can bake in a continued acceleration to, say, 2% growth by 2027.
You talk about the sort of high-level things that are going well. So, yes, S&P Global, I think there's possibly Moody's later in the week. To go from that high-level stuff to actually feeling a difference on the ground, does one automatically lead to the other? I would like to think the sort of small wave of good news that we've had over the last month does feed into the broader economy in some way.
So you would think that they dance together reasonably well. And I do think the statistics on the ground, as you suggest, speaks to that. So, for instance, inflation has been generally low at between 3 and 3.5%, while national wages in real terms will be about 3 percentage points higher than that. In other words, South Africans are going to experience positive real income growth, both as a function of, let me call it, sticky nominal wage settlements against fairly low inflation. Secondly, interest rates have declined by a cumulative percentage point. And in the nature of the transmission mechanism, this year's decline in interest rates will have its maximum effect in 2026 as people take advantage of that. As a positive omen, we see car sales at its highest nominal number or sales figures in years, just indicative of individuals willing to spend on credit, and also just easier credit conditions combined with an improvement in debt affordability. So on the ground, there's a semblance of more constructive consumer behavior, which could be a draw card for private investment in due course.
And over the longer term, a lower inflation target? I mean, I would like to think that brings down the cost of credit generally and has an impact, but it'll take a long time for us to feel that.
So, yes and no. No, in the sense that the bond market, which is, of course, where corporates and government go to borrow, that has already raced down. So, you had a steady state bond 10-year interest rate of around, let's say, 11% a year ago, and now you're at around 9%. So there's already 2 percentage points, just generally speaking, of savings as a function of the Reserve Bank signaling that it will target 3% alongside the bank's historic credibility to deliver what it anticipates it will deliver. So in this respect, you've already had, let me say, established money, corporate money and government money enjoying the lower interest rate environment as a function surely of their promise. In due course, yes, consumers who borrow as what we say at the short end, in other words, prime interest rates, they too will enjoy over the medium term lower interest rates as a function of the possibility that the bank is able to guide inflation and make it sticky at around 3%. So some benefit already injected into the economy, and in due course, more to come, particularly for the household sector.
Goolam Ballim, thanks so much, Chief Economist at Standard Bank. Really appreciate it.